Oil charges inch lower as China COVID recession issues outweigh tight supply. Singapore oil fees inched lower after seesawing through early trading on Tuesday, as concerns that gasoline demand could be hit by means of a possible recession and sparkling COVID-19 curbs in China outweighed tight worldwide supplies. U.S. West Texas Intermediate (WTI) crude fell 22 cents, or 0.2% to $120.71 a barrel at 0353 GMT, at the same time as Brent crude futures eased 25 cents, or 0.2%, to $122.02 a barrel. Discussion in the oil complex nonetheless revolves round Libya's decline in manufacturing, China persevering with to impose measures to sluggish the unfold of COVID, and issues round worldwide recession woes driving demand destruction, stated Stephen Innes, handling associate at SPI Asset Management. In China, a COVID outbreak at a bar in Beijing has raised fears of a new phase of lockdowns simply as regulations were being eased and gas call for turned into expected to company. The Chinese capital's most populous district, Chaoyang, kicked off a 3-day mass testing campaign amongst its kind of 3.5 million citizens on Monday. About 10,000 close contacts of the bar's patrons have been recognized, and their residential homes placed under lockdown. Looking beforehand, oil expenses might also face greater strain if the U.S. Federal Reserve surprises the markets with a higher-than-expected interest rate hike, CMC Markets analyst Tina Tang stated. Otherwise, investors' consciousness will go back to China's COVID regulations, whilst we should see costs tracing the call for outlook of the world's second large street economy, she brought. Capping losses have been tight worldwide supplies, irritated by way of a drop in exports from Libya amid a political disaster that has hit output and ports as other producers to satisfy their manufacturing targets, and Russia faces bans on its oil over the struggle in Ukraine. ANZ research analysts referred to Libya's oil minister Mohammed Aoun announcing production in the United States of America has dropped to 100,000 barrels according to Day from 1.2 million barrels of oil per day final 12 months. The marketplace will be anticipating weekly U.S. stock records from the American Petroleum Institute on Tuesday and the U.S. Energy Information Administration on Wednesday for a view of how tight crude and gas supply continue to be. 6 analysts polled through count on U.S. crude inventories fell by way of 1.2 million barrels in the week to June 3, while forecasting that fuel stockpiles rose by way of about 800,000 barrels and distillate inventories, which encompass diesel and heating oil, were unchanged.